Technical difficulties to kick things off today. Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us as always to talk all things markets is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
It's a pretty big day or a pretty big week for us when it comes to reports. It's one of my favorites every month. We're going to talk livestock slaughter, cold storage, cattle on feed numbers as well. But to kick things off, let's recap what happened this week in the markets.
Yeah, on the cattle side this week, fed cattle markets were about 50 cents higher on the week. The feeder cattle auctions around the country were anywhere from steady to $4 higher this week. On the futures side, the December live cattle futures contract closed down $2.50. And the November feeder contract was down about $4.40. On the beef side, choice box beef prices were virtually unchanged on the week. That still leaves them almost $72 above where they were a year ago at this time. On the pork side, cash hog prices continue to move lower this week, down $4.20. The December lean hog futures contract was also down hard this week, down $4.45. And the pork cutout value also lost $5 this week, really driven by some lower belly prices.
It's been an interesting week to watch what's going on the bill or on the pork side of things, but then the cash hog markets continue that slide. How much do we need to be watching what's going on at this point as we think about maybe some risk management tools? Especially as we're watching prices on the input side of things as well.
Yeah, so for sure, I wish I could have told producers 2 or 3 weeks ago to do some risk management on terms of where hog prices were, but we are seeing lower prices these last few weeks. I keep saying, you think back to the hogs and pigs report, supplies ought to stay in some reasonable shape for us into the early part of 2022. So you'd like to think at some point here, we'll get some bounce as we get later in the year, but certainly want to think about the volatility, things like fertilizer costs and how much corn we get in the ground next spring are beginning to be on the minds of many. And we don't plant a lot of corn next year and we keep corn prices higher. That certainly could affect the bottom line for pork producers here.
It's been interesting to talk to farmers around the country as they're watching what's going on with fertilizer prices as well as supply chain disruptions to be able to get the things that they need to put a crop in the ground in 6 months from now, 5 months from now?
Yeah, so I sometimes say, welcome to some of the aftermath of COVID-19 and plus strong demand, but just trying to maintain with what's tight labor supplies in many segments, transportation being one, and distribution, et cetera. It's certainly now showing up in what we're paying for some of these inputs.
All right, let's talk weekly slaughter numbers and take a look back at what's been going on this week.
Yeah, so on the cattle side this week, USDA is telling us 661,000 head of cattle to be slaughtered. It's actually up 15,000 from where we were a week ago. And on the hog side, a run of 2.606 million head, according to USDA. It's actually down slightly, down 19,000 head from where we were last week. When you look at those year-to-dates, cattle slaughter 3.1% higher relative to 2020, and hog slaughter down 1.9%.
Livestock slaughter numbers out this week. First of our big 3 reports we're going to talk a little bit about as we take a look at beef and pork production. How are things looking in comparison to a year ago?
Yeah, so I think, as we think about the September data that we got out, 2.299 billion pounds of beef produced in September of 2021 and 2.266 billion pounds of pork produced. Beef production down 2.4% in September relative to a year ago, and pork production down 3%. So again, those current supplies, we're in fairly good shape relative to where we were a year ago. When you look at the year-to-dates, a little different story. So pork production down 1.4% for the first 9 months of this year relative to 2020, while beef production is actually up 3.6% in those same months.
cattle on feed numbers also came out this afternoon, and it looks like, at least on feed, fairly close to pre-report expectations.
Yeah, that's right. So you look on feed October 1, so still running near year ago levels in terms of those on feed numbers. For October, we were actually down 1.4%. That's pretty near where the pre-report estimates were coming in. So not a big surprise in terms of October 1st cattle on feed. However, placements for September, the pre-report estimates would have actually suggested higher placements this year relative to a year ago. On average up 1.2%, but the report we got today down 2.9%, so fairly positive or bullish for us, I think, in terms of what we got on September placements.
When we look at this report, and then I'm going to talk a little bit about like the global picture as well. There's been some reports about Brazil maybe pulling back on some of their beef production because of issues with China. Does that create additional opportunities for U.S. producers? How does that maybe play out when we look at prices in the near and midterm?
Yeah, so I keep saying I can be fairly optimistic about cattle prices as we get further into 2022. I say drought in this country is going to have a big effect. You talked about Brazil also, maybe on the supply side. A little less engaged in 2022. Probably strong demand from places like China for some U.S. beef. So all that I think is the positive side. I would, however, remind us that countries like Australia likely are going to come back with some additional beef production in 2022 as they kind of climb back out of what's been a dry weather period for them. So they may be stronger competitors than we've seen for a while. So that may affect markets like Japan for us in 2022. But to me, there's a lot more reasons to be more positive about where prices go for cattle as we move ahead than downside.
Final report for us to touch on today, Scott, cold storage numbers. As we take a look at those, there's, especially on the pork side, you really have to watch what's going on. I think we've really got to watch what's going on there.
Yeah, so we stay really tight on the pork side of the equation. So ending stocks for September, a little more than 450 million pounds of pork. We've just kind of been at that 450 plus or minus a few million pounds for really well over a year as we look back. So it stays tight. Again, you can find individual categories, belly stocks still reasonably tight sitting there. So nothing on cold storage that would suggest we're getting any kind of backlog of product on the pork side. Even for beef, we still talk about 2021 that's roughly 25 million pounds below year-ago levels when we look at those September ending stock numbers. Yes, they were up, roughly 20 million pounds from where we were back in August, but that's a seasonal increase that we often see. So to me, we're setting in good stead in both beef and pork freezer stocks as we look at the end of September.
How do we look at, and then we take into consideration the demand? And I mean, we're still seeing fairly strong demand domestically for both beef and pork. And does that big picture help put things in a more positive column when we talk about things to be optimistic about in the long term?
Yeah, so we again, I think, continue to see what's been pretty optimistic demand, or I shouldn't say optimistic, pretty good demand, current demand for both beef and pork. The fact we don't build stocks, the fact we talk about retail prices that are at record levels, to me, all that bodes well for what's happening with domestic consumers. And in fact, as we continue to see some recovery as COVID-19 continues to maybe lessen here over the last several weeks, but for me, there's a lot of positive news in where that domestic demand goes moving forward. I guess I would remind us that also offers some downside risk because we have been so positive. I just always want to say, if consumers were to go back to this old red meat is somehow unhealthy for us that we lived much of the 90s with, that doesn't spell good news for us. I hope not to jinx us with that discussion, but risk management more long term from that. It's hard to get demand more optimistic than we've been, I guess, of late is the point I want to make.
Scott, I think that'll do it for us this week. As we look ahead to next week, a little bit shorter and a little bit less busy for us.
That's right. So the only big report next week, we'll get restaurant performance index at the end of the week.
Well, we will talk to you then. I'm sure there will be plenty for us to chat about as well. Good to see you as always.
Great to see you as well, Megan. Have a great weekend.
You too. To have a weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can click subscribe. You can also submit questions and comments as well. And for some great podcasts while you're in the cab of the tractor, truck, or combine this fall, go to brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner for Brownfield.